you so much for joining us here at SuperInvestor. In an environment like this, that's so dislocated, how on earth do we start to look at how we get correct valuations?
Very good question, and indeed this is a market where we are very adamant on having the right discussions and the right views about valuations. Valuations have become more and more strategic in the discussions of GPs and also in their discussions with LPs, not only to make sure that we value the assets at the right level, but also because this has impact on fundraising dynamics, for instance, as those are the valuations when it's unrealized funds. Those are the valuations and the performance that we will be showing in the context of raising funds, but also on the broader sense, it's important, it comes to our attention that it's important also in anchoring the right value for exits, for instance, especially in assets that we've been holding already for some time.
Indeed, it's integral and there's so many knock-on effects. How good are LPs becoming at sort of questioning it as well?
We do see more and more questions about valuations. For instance, also in context of LPACs, which is the advisory committee of our funds, that LPs do ask more questions about valuations, require more details. The level of challenge, I would say, has been the same overall, but there is, let's say, more scrutiny and more need for more granularity in the data, in the type of analysis we provide, etc.
Why is getting those valuations right so key?
It goes back to having, from an LP perspective, from a GP perspective, for us, it's of course that's a little bit. We invest into a company and we have an equity story to create a certain value, and that's the case that we've underwritten. And at the same time, we have to be able to also show in our valuation, reflect that value creation story throughout the holding period. So that's key. It's key that we don't have big swings in the valuation, but that's also when we exit, that potentially we have an upside, but not complete disconnect between our value and the price at which we exited. So that's the view from a GP perspective. And from the LP perspective, that's also how you build trust over time. In showing that you have robust methods, that you've delivered on whatever values you've been sharing with your LPs, and that over time, indeed, if you put that on the table for your LP for fundraising, for instance, that they have trust in those values that you are showing them.
We've heard a lot here at SuperInvestor about how key that trust is in an environment like this, that LPs are scrutinising their relationships very carefully with those managers. So that will be a key factor, won't it? And how important is that trust?
I would say, trust, of course, one of the roles of valuation is that we build trust in valuations, of course, but that's one aspect among others that we have in our LP-GP relationships, of course. If I take a step back on the relationship LPs and GPs, and if you look around at a pan-European buyout firm, right, in terms of returns, maybe we have few points of discrepancy in terms of performance, in terms of returns that we are giving back to our investors. And then if you look around, how would you, what is that X factor that you're offering to your LPs? And that's in general, it's the intimacy, it's the trust. And the respect with which you treat your LPs.
So we've talked there about trust within the relationship between LPs and GPs. Just moving to a slightly different area, in a very tricky environment like this, what else needs to be in place for private equity? I think you've talked quite a bit about embracing digital better. They're very good at investing in tech companies. Are they good at doing it themselves?
Yes, what is important is that transparency and what we share also in terms of information to our LPs, for sure. And today, given the volume and given the volume of data, obviously, and also the scrutiny by which LPs look at investments, look at ESG data, etc., we do need digital tools in order to leverage that effort and to be able to deliver on the asks from our LPs. We see more and more bespoke reporting requests, so we try to find the balance there. And how good are we with embracing that? I think everyone is trying to ramp up as fast as possible. And today there is no silver bullet saying this is the right operating model in terms of team organization, in terms of tools, systems and processes. So that's the secret sauce, is to understand how do I put all those things together under my governance, of my company as a GP, in order to deliver the best to LPs.
Because LPs are demanding that level of transparency, and you being able to provide that digitally will be absolutely crucial.
It will be crucial. Otherwise, I think we've seen the volumes and the frequency of the requests. At some point, we won't be able to deliver that if we just do it manually. So there is a need to ramp up. And of course, you want to do that with a clear mindset. What are the goals? So there is no need also to go beyond. So now we realize also that private equity, and I think that's what you mentioned earlier, maybe we work a lot with our companies to become digital. So to what extent are we looking in-house to do the same? And if you look around, it's a young industry. It started in the last 90s, and the core focus has been on investments, on finding the right target, delivering the right returns. So those who are here today are the ones who survived. And now we're asking other questions, because these companies have become way large. AUMs and their managements are huge. LPs have become more sophisticated. So that's the moment, it's a kind of crisis of growth that you have to ask yourself, I need to ramp up certain things in order to remain competitive in this industry.
There's an awful lot of your colleagues gathered here at SuperInvestor. It's the largest one ever. So if you were to have a conversation with them this week, what would you hope their key takeaway from their chat with you would be?
The key focus for me this year, and it will remain even next year and the years thereafter, is data quality. How to ensure that you have the best data in order to be sure that you have good valuations, that you have good reporting, that in your marketing material is correct. So that's very important, and the data governance around that.
And that gives you huge credibility with your GP, with your LPs.
Absolutely.
As well.
Yeah. Overall in the markets, and also so that's the external factor of how are we going to use data externally, but also for information sharing and decision making within the GP itself, for senior leadership members.
And just finally, what do you like about coming to an event like this? What do you glean from it? You talked there about coming to find insights, and do you
Absolutely.
genuinely walk away feeling like you've gained that?
Oh, definitely. So what I like is the fact that people do share how they see things, how their teams function, how they're organized. There is no, let's say, secrets in a way, because at the end of the day, we do realize that it's not because I know how your team works or which system you took that I'm just going to copy paste it. But it's very insightful, because it's a moment where we can ask ourselves, is the way I'm doing things the right way? Can I learn from my peers?
Hind, thank you so much for joining us. Great to hear your insights.
Thank you.